In this one, I'm going to explain one of the most important concepts when it comes to quantitative trading. Now, this is a little bit of a unique thing, right? So when you think of traditional click trading, one of the things these traders really have to focus on and keep in check is their emotions. Now, to solve this problem, someone who knows a bit of coding and math and quantitative trading, they would just program this, right? They would program whatever strategy, and then they would go into the market and deploy the strategy, and it would be all good, and the robot would make decisions for them, and it's fine. There's no emotions involved because we're using the machine. We're using the robot. Now, here you can see I am testing a strategy. This was like a sort of higher frequency market making strategy, as you can see, because we pretty much buy and sell on each candle. And in fact, if you have a look, can we zoom in a little bit? Yes, we can. We see that we're buying and selling on almost every candle, but there are actually multiple buys and multiple sells. So, this sort of time frame of candles isn't quite informative. But so you can see the strategy is kind of like a market making thing going on. Now, the thing I had to get over as a quantitative trader is, say I spent maybe 2 or 3 weeks developing this strategy, right? And then the way I test it is I did not back test it, right? Sometimes back testing can be a bit iffy. So what I do is I just make sure the thing is not going crazy, and then I cut to straight to deploying it into the market with live data. So but very, very small size. So we end up losing like no more than $5 or something like that. I think that is a much more accurate test because the back test can be a little bit wrong. Past performance is not indicative of future outcomes, right? So what I did was I deployed it live, and then I wanted to test it. And then this is the result. Here you can see I've highlighted it. I have lost about $4, right? I've lost $4, and so this was the from the if we bought in and then to the final close, right? And so we traded. So each of these trades are about $10 in volume, and then the total quantity traded was about $1,000. So probably like 100 trades or something like that. And then this is over. So this is over. So I think this period is, yeah. So it was over a few minutes, maybe like half an hour or maybe less than half an hour. But it was a substantial enough to say, hey, I've got a sufficient sample size. Now, what happened was, it was just market making. And then, you sort of incur losses, wins, losses, and stuff like that. That's all good. But you sort of need to look at the overall picture and see how the strategy did. And so if you sort of sum everything up, yeah, it was a net loss, right? And you average everything out, and you sort of lose like a few basis points on each trade, sort of averaged out. So now you've got two choices. As a professional quantitative trader, you can say, you know what, I'm going to keep trying. Actually, I'm going to deploy that on more size. Maybe it might work. So that is pure emotions. This is the emotional side of quantitative trading. You need to be emotionally intelligent enough to know that your trading algorithm doesn't work. So we got to cut it out, scrap it. We're going to change something, right? So it's just all the evidence is pointing towards that. The professional would be like, no, this is not working. So we're going to kill it. Even though it took me 3 weeks to develop and code up, right? We are going to kill the strategy because we do not want to lose significant amounts of money. So I thought this was just a little nice thing I'd share with the community. Something you've got to watch out for, especially if you're a quantitative trader, because the emotions, you get married to the quantitative strategy you have. So do not get married to it. Watch out for it. And I guess I will see you in the next one.